Huge news! Ford and GM shocked as they can't sell EVs. In the fast-paced world of EVs, Detroit's automotive giants, under the leadership of General Motors CEO Mary Barra and Ford CEO Jim Farley, find themselves racing to catch up in the electric vehicle EV game. Initially, both companies set huge ambitions to produce and sell millions of EVs in the coming years. However, as the landscape shifted with a drop in demand and prices, exacerbated by the impact of an unprecedented union strike, Barra and Farley are now applying the brakes to their EV initiatives. In today's dive into the automotive realm, we'll be uncovering the latest shifts in the electric vehicle landscape where Ford and GM are almost giving up on the EV transition. So buckle up, it's going to be a wild ride. Let's roll. Ford and GM just released their Q4 earnings for 2023, and though both GM and Ford had positive sales performance in the fourth quarter of 2023, their EV sales were not as high as those of some other automakers. GM reported selling 19,469 battery electric vehicles in quarter 4, which is a 20% increase from the previous year, but its overall EV sales fell flat due to challenges with ramping up production of its new Ultium-based models. Meanwhile, Ford's annual EV sales increased by 17.9% to nearly 26,000 units, with sales of the electric F-150 Lightning up 54.7% in 2023 to 24,165 units. However, both automakers have lower EV sales compared to some young EV startups in China, such as XPeng and NIO, which had 140,000 plus and 160,000 plus sales in 2023, respectively. Following GM's Q3 earnings release on October 24th, investors were quick to point out that GM stock has experienced a 25% decline over the past 9 years under Barra's guidance. Detroit's EV push isn't working as expected. In a twist of events unveiled during Ford's Q3 earnings call on October 26th, CFO John Lawler revealed the company's decision to pump the brakes on approximately $12 billion in slated investments in electric vehicles (EVs). This strategic move comes as Ford grapples with the challenge of turning a profit in the EV sector amid an intense price war. EVs continue to enjoy robust demand. The landscape is marred by significantly lower pricing and excess production capacity, as noted by CEO Jim Farley in his dialogue with analysts during the call. Acknowledging this economic hurdle, Ford is opting to delay various planned investments, including constructing an EV battery plant in Kentucky. During discussions with analysts, CEO Jim Farley shed light on Ford's EV strategy, emphasizing electrifying its most popular models, such as the iconic F-150 pickup truck. Interestingly, Farley also revealed a strategic decision to continue producing gas and hybrid versions of these vehicles. This dual-track approach aims to preserve existing customers' loyalty if the EV venture encounters challenges. Farley said that Ford's EV strategy and ICE strategy is to go after customers they know really well. He further outlined the company's commitment to refining its EV profitability by leveraging insights gained from earlier experiences, anticipating improved results with the next generation of EVs. But even this is not turning a profit yet. The UAW strike has cost Ford and GM billions. During the recent earnings calls, executives from General Motors, GM, and Ford provided insights into the financial repercussions of the 6-week-long strike led by the United Auto Workers, UAW, against Detroit's big 3 car makers, Ford, GM, and Stellantis. The UAW-initiated strike took a toll on Ford and GM, costing them $1.3 billion and $800 million, respectively. The strike cooled off on October 25th, a day before Ford's earnings release, as the union and Ford reached a tentative deal. However, negotiations with GM and Stellantis were prolonged a bit, adding an element of uncertainty to the situation. With Ford employing 57,000 UAW workers, GM employing 46,000, and Stellantis employing 43,000, according to the Associated Press, this strike almost paralyzed the manufacturers. General Motors faced delays and software glitches in the early days of the EV transition. The 2024 Chevrolet Blazer EV, heralded as a significant stride in General Motors' electric vehicle commitment, has encountered a rocky start, according to Alistair Weaver, the editor-in-chief of Edmunds.com. Edmunds.com, a prominent online automotive authority renowned for its long-term testing of purchased vehicles, acquired the $60,000 Blazer EV in October with the intention of subjecting it to a thorough examination. However, their initial experience with the electric SUV proved far from positive, marked by a series of glitches that emerged early in the testing phase. They took it to a Chevy dealer and asked them to look at it, and they came back with nothing short of 23 different error codes, which is almost unheard of. The situation escalated as the Blazer EV spent an extended 3-week stint in the service department at Culver City Chevrolet, prompting Edmunds.com to headline the 23 problems encountered within just 2 months on their site. Consumer Reports joined the chorus of discontent, adding their negative assessment after purchasing a Blazer EV. Their web post expressed disappointment with the flaws found in the electric SUV, echoing the concerns raised by Edmunds.com. General Motors issued a nationwide stop sale order on the 2024 Chevrolet Blazer EV on December 22nd. This means that even if dealerships have the electric SUV in their inventory, they are prohibited from delivering them to customers until GM resolves the identified issues. The decision was announced through a statement from Chevrolet Vice President Scott Bell, emphasizing the company's commitment to customer satisfaction and the temporary halt in new deliveries to address software-related quality concerns. This early turbulence has buyers on edge, crippling GM's sales for January. While General Motors boasts a rich history as a legacy automaker with over a century of success in producing gasoline-powered cars, the transition to electric vehicles presents a new and complex frontier, as noted by veteran Detroit auto journalist Paul Eisenstein, editor of Headlight. News: GM, like many manufacturers, is grappling with the challenges of electric power, discovering that it is neither as simple nor as reliable as initially expected. Only half of Ford dealers want to sell EVs as adoption slows. In another noticeable shift, only half of Ford dealers have chosen to sell electric vehicles in 2024, representing a decline from the previous year when approximately two-thirds expressed interest. Ford spokesman Martin Gunsberg confirmed that only 1,550 Ford dealers have committed to selling EVs in 2024, a decrease from the 1,920 dealers pledged to participate in Ford's voluntary EV program around the same time the previous year. This change aligns with evolving sentiments in the electric vehicle landscape, indicating a potential cooling of enthusiasm for EVs among dealers. Ford spokesman Martin Gunsberg offered insights into the shift, stating that EV adoption rates vary nationwide. As dealers have completed their own due diligence in their local markets, dealer enrollments for 2024 entry have dropped to about 50%. This adjustment in dealer participation underscores the dynamic nature of the automotive industry as it navigates the challenges and opportunities presented by the changing landscape of electric vehicle adoption. The varying rates of commitment among dealers highlight the nuanced and localized considerations that play a crucial role in shaping the trajectory of EV sales for a major automaker like Ford. The other half of Ford's roughly 3,000 dealerships are choosing to stick with internal combustion engines, ICE, and hybrids. The reported decline in dealer enthusiasm for carrying EVs may be attributed to various factors. One aspect could be the substantial investments required by Ford, compelling dealers who wish to offer Ford EVs to make significant financial commitments. This includes investments in DC fast chargers, enabling each sales lot to serve as a charging station for EV owners. Another potential factor contributing to this shift is a broader market trend. After an initial surge in EV adoption enthusiasm, there has been a slowdown. Challenges such as a lack of charging infrastructure, concerns about reliability, and persistent range anxiety, fear of an EV running out of power, might be contributing to dealers' hesitancy. These dynamics underscore the multifaceted considerations shaping the automotive industry's transition to electric vehicles, with factors ranging from infrastructure development to consumer confidence playing pivotal roles. Well, that wraps up our exploration into the evolving landscape of electric vehicles. What are your thoughts on this shift in dealer enthusiasm for EVs? We'd love to hear your insights, so drop your comments below. If you found this information intriguing, don't forget to give the video a thumbs up and hit subscribe for more updates on the latest developments in the automotive world. Until our next exploration, stay tuned and stay curious.